Hello there, this is James and you're watching Tixee Live. In fact, you're watching a Tixee Live watch-along of the NFP average earnings and US unemployment. Before we get started on that though, don't forget these little episodes, these little videos even, are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So here it is. Here's the day. Happy NFP Day. Like I said this morning, those of you who kindly joined me this morning, I'm just wondering whether or not this is a story waiting to happen. Okay, waiting to happen. Because today is the day we'll find out if Powell, the inflation terminator, as I call him, is right that the US job market remains strong. Now, expectation of the NFP is 268,000 new jobs created. If this is the case, if this is the number, then this is the slowest growth since November 2021. Now, as I said earlier this morning, I'm seeing a pattern with job data at the moment. This is why I'm thinking this could be, could be a major impact potentially, because let's go through the job data about the NFP numbers, since October. Okay, October 677,000, November 647,000, December 588,000. January, 504,000, February, 714,000, March, 398,000, April, 436,000, May, 390,000. And the expectation is 268,000. So as you can see, we're gradually seeing a decline in new jobs created. And here's the other thing, here's the flip side. Okay, let's have a quick look at the initial claims. Okay, the initial claims. Back in April, it was 181,000. Then it was 202,000. Then 197,000. 218,000. Then 217,000. Then 202,000. 231,000. 233,000. And yesterday, it was 235,000. So again, you're seeing an increase in initial jobless claims. So, I'm just wondering whether or not, as I'm seeing this pattern, we're seeing a decline in new jobs and we're seeing an increase in unemployment benefit, so to speak, of people signing on for unemployment benefit for the first time. As well as that, as well as the NFP, of course, don't forget we have unemployment, US unemployment expected to be 3.6%. Average earnings, which is going to be important, 5.2%, especially, of course, obviously the cost of living. So average earnings is going to be a key bit of data to watch out for. And the real question is, if we are going to see a decline in this data, a decline in average earnings, a decline in non-farm payroll, will the Fed be nice or not? When I say be nice, I mean less aggressive with their interest rate hikes. And that's the real question. That's the real question. And we'll look at two scenarios in a moment. But yesterday, two Fed members, Waller and Bollard, they said yesterday that they would back a 75 basic point rate hike in the next meeting and dismissed economic slowdown. So if they're denying there is an economic slowdown, will negative job data persuade them that there is an economic slowdown? Because I say that's a major factor. I like us to really sort of think about and question. Anyway, these are two scenarios which I can foresee happening. If we get a strong number, okay, could give the market the idea of a soft landing. What I mean by soft landing, as in a soft recession, and the Fed will continue with its aggressive rate hikes. What that would mean to the market, we could potentially see on the back of that, weaker dollar. Okay, weaker dollar. On scenario 2, a lower number might give the market the idea that a slowdown has begun and the Fed may be gentle. If that's the case, the other way around, this scenario, okay, we could see a stronger dollar on the back of this one. on the back of this scenario, if a lower number comes in and gives the market the idea that a slowdown has begun and the Fed may be gentle, we may then see a weaker dollar and a little bit of optimism creep in. But really, to be honest, it depends how the market really foresees this. But I'm just interested to see if indeed there is a slowdown in the job market and whether or not there is a big impact. Because I'm seeing a pattern here. I'm seeing a pattern with initial claims. I'm seeing a pattern with obviously the NFP. So, and I said yesterday, initial claims, a lot of people ignores it. But initial claims is like a canary in a coal mine. It's an early warning system to tell you that you may face economic hardship. So I think that's something. Anyway, we got a couple of minutes to go. One of my regular viewers, a good friend actually, I'm really appreciative, asked a great question. He left it in the comments, the last video I made. And bear in mind, this question is linked to one of the assets I'm going to be watching, okay? His question was, hi James, why is raised interest rates causing a decrease in gold prices? Fantastic question, great question. And the answer to that is, of course, if you've got there's several reasons. First of all, high interest rates is making the dollar stronger. So obviously gold is priced in dollars. So that's one of the reasons. Second reason, with everything going on at the moment, bond yields are increasing, okay? So what's happening, you see smart money going into bond yields and the US dollar. And as well as that, don't forget, gold is a physical commodity. It doesn't have interest rates. So what's happening, the smart money is going to bonds and into different types of investments where they can take advantage of higher interest rates. And this is why gold prices are under pressure. And as well as that, with an increase in interest rates, makes it more expensive to hold physical gold. So this is the reason why the increase in interest rates is decreasing the price in gold. Fantastic question. Please keep asking me more questions like this. Like I said earlier on, you can ask me live on air, but if not, and you think about something later, chuck it in the comments on YouTube or Facebook. I will see it and I will answer it in my next episode. Anyway, before we great question, I really appreciate that. Before we get going, there's something else I just want to quickly share with you, which I think is just as exciting. Whoops, wrong one. Sorry. This, I think, is what is really exciting. Us humans are social creatures in general. We like to help. We like to communicate. We like to be together. And we like to share. This is why we have launched social trading. Social trading gives you a world of opportunity where you can follow any strategy you choose and share your own strategies with simple ease. And best of all, there is no need to download or open another account. All this is available for you on your own trading dashboard. Experience social trading now with Tixee. There we go. Very exciting. And like I said, I'll be doing some tutorials on that platform very, very soon. So keep an eye out for that. Just had a comment here. My friend, you're more than welcome. You're more than welcome. Thank you for the question. It was an excellent question. Please keep them coming. You're more than welcome. Thank you. Okay, so here we go. We have 10 seconds. As normal, I have my trusty little mobile here to hopefully give me the information as soon as it comes in. So let's go and have a look and see what it is. So yeah, actually, okay, it should be any minute now. Any minute now. Okay, let's have a look. Any minute now. Okay, here we go. Right, okay. Okay. All right, hang on. Right. Non-farm payroll comes in at 372,000, so higher than expected. Unemployment rate comes in at 3.6% as expected. Average earnings year on year, that comes in 5.1%. 5.1%, so slightly lower than anticipated. But NFP, that is a cracking number. That is a good number. Let's have a quick look to see what's the market done to that. how the market's reacted to that. Right, straight away, so I wanted to look at gold, okay? So a higher interest rate, basically, that's not higher interest rate, higher NFP. What the market's going to start looking at now is whether or not, obviously the labor market is better than anticipated. That means the Fed are going to increase interest rates more, are going to be aggressive. So here we see gold now is currently testing that level just above $1,730. Let's have a look across the board on other things. The cable, okay, down 1.19877 on the back of that news. Euro dollar, the big one, 1.01254 on the way to parity. Dollar yen, back up above 136. 136. So yeah, so breaking news, NFP announced higher than expected. Powell clearly is right. We do have a strong labor market. Unemployment announced as expected at 3.6. So there we go. But that NFP number, 372. Wow. Yeah. Look at that, 136 on a stronger dollar. So we are looking potentially at scenario one, like I mentioned earlier on, scenario one. So there we go. Okay, that's actually pushing quite high nicely. Let's have a look at the euro again. Could this be the straw that breaks the camel back? Could this be the bit where finally puts the momentum for the euro to go to parity? That is the question. Let's look, see how gold's doing, testing that level as well. Okay, still trading just above it, 135. So it's just testing that level of interest, $1,730. Right, there we go. What a shocker. What a surprise. Okay, well, I'm going to be back online again in about an hour's time. So 1:30 p.m. We're going to give us time to digest what's just happened. Okay, and have a look how the market reacts, because don't forget, sometimes it takes the market a little while to sink in all the information. So I'll be going on a bit later today at 1:30 p.m. UTC. So please come along and join me for that, and we'll discuss this and plus other key events as well, not just NFP related. And again, as normal, as it's the end of the week, I'll do my weekly recap. So there we go. Don't forget, if you're watching me on Facebook and you like, by all means, give us a follow. If you're watching me on YouTube and you like it, by all means, subscribe if you like. Click the notification button on the site so you know next time I'm going live. If you've liked this little episode and you found it insightful, interesting, and you've put up with me, which is always a challenge, give me one of those. I like to know about people who are liking these videos. On that note, don't forget, I'm back online again at 1:30 p.m. UTC, so just in about an hour's time. Plus, don't forget, that's when the US opens as well, so we can have a quick look and see how the US is reacting to this information too. But anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, or 1:30 p.m. UTC. Till then, every single one of you, trade